Good evening, ladies and gentlemen. Yes, it is Monday evening, 8 o'clock. That means only one thing. It's time for Crypto Talk. And thank you for joining us tonight. And I see there's still one or two people getting into the waiting room to get onto the call. And as we get them in, good evening, everybody. Hello, Stephen Bardwell, Ray. I see that you said hello in the chat box. And welcome to this call. It's our absolute privilege to host you on a Monday evening. And tonight we have an amazing topic, as you've seen, as we've entered into the room. Tonight we look at the mainnet launch. So tonight we will look at what do I do, where do I go, what do I do in my trading strategy for the next few weeks with the trading strategy going into Ethereum Mainnet Launch. And we all know the date. Well, not exactly, but here and there around, we know the around date, the 15, 14, 15, 16, around about there, 14, 15, memory serves me, Jason. I don't have the number in front of me, but that's what I can recollect. 14, around about 14, 15 September is the date for the mainnet launch. So everything is getting towards that. And so that's part of what we discussed tonight. Should we have a change in focus? Should we not? But before we even look at that, we have to go and look at the market. And as for that purpose, we have a subject matter expert in the crypto school on crypto trading, none other than our own Jason Ashington. And we really appreciate what you do, Jason, and the time and energy and effort that you spend Monday mornings on the call. First thing Monday morning with the team in the morning call, and then on a Monday night in the room again. And so, yes, welcome to this call. And thank you, Jason, and thank you for your preparation. And please take over, do your thing.
Thank you, Daniel. Good evening, everybody. Yes, it's been 2 weeks since we had our last crypto talk, and a lot has happened in the last 2 weeks. And I'll just set the tone by just reflecting, first of all, on crypto bubbles. Tell me you can see our crypto bubbles there.
Yes, we can see it.
Okay, so this is on the weekly, and it's on the top 100 coins. So this is what's the moves that we've seen in the last week there. We've got Anchor at 46%, CL at 98, Chili's 31, Shiba 30, GMT 15, and then we've got Gala. There is a few reds that have come through here. If we go and look at the month, and that's looking much better. So we have had a bit of a retrace in the last week, but how's that for the month? Looking absolutely fantastic. Some big moves are over 300%, 200%, near 61%. If we go down and just have a look at the exchanges, Binance, for example, in the last month, also reflecting some coins that have done over 200% or close on 200% there. And then for the week, yeah, a lot more bit of profit taking place here in the last week. So nonetheless, we've had some fantastic moves in some of these altcoins. If we have a look at the Fear and Greed Index, and we're sitting right now at 45, the Dow has moved from this area where we were in 4 or 5 weeks ago down about 20. We're now at 45. It still represents fear. But you can see, for example, last week we were at 30. So even if last week we've moved and last month we were on 21. So this dollar has moved in the right direction. The retail still haven't joined the party yet. When I say retail, I'm talking about the masses. They haven't joined yet. And it has taken us a bit of time to get up. I think a lot of the mass retail have lost money in the last 8 months from the all-time high that we had in November last year. They started losing money already in December, January, February. There's a lot of retail that are very scared to come back into the crypto market based on their losses that they had earlier in the year. But if we go down to the bottom here and just see how we're trending on the graph here, you can see that we've come off the low here, where we spent quite a bit of time here between the middle of May to the 15th, 16th of June. So we spent about 5 or 6 weeks down right down here between 10 and 20, and we're starting to move up again. Just remember what happens that we go up. We normally go up into this 80, 90, 95 area. We spend a bit of time there. this is where the whales sell off, and this is where the retail's joining the party up the top here, and the whales sell into the retail. So we're going to do the same this time. We're not going to get caught like what happened in November, where at that time the news was out that we were going to 100 or 130,000 in Bitcoin, and we were holding on for dear life because we wanted 100,000. And guess what? The whales were selling out there, and they pushed this market down.
Yeah, Jason, and as that retracement happened and started, I was buying in like crazy because we're going to go to 120.
Yeah.
So let that say something about my portfolio.
Yeah. Okay, so let's go and have a look at Bitcoin. And the last crypto talk was, I think, the first 14 days ago.
Yep.
And the first was, sure, where's the first here? Right down the bottom here. So the first was down here. We were around about 22,800. And we have gone up this morning to a high of 25,200. So that's only 11% move on Bitcoin. Fair enough, it's not too bad. But the star for the last 2 weeks has really been Ethereum. And Ethereum in the same time has gone from, we were down at about 1,600, and we went right up to 2025. So that's a 27% move on Ethereum versus a 10% in Bitcoin. So Ethereum has really been moving very well in the last 2 weeks, and that's based off this news here that on the 15th of September is going to be a mainnet merge. So at the moment, miners mine Ethereum. So they use the old mining method, and where they mine Ethereum, and that is now going to move from proof of work, which is mining, to proof of stake. And it's going to be called a major upgrade called the merge. Okay, so that's happening on the 15th, and that's what really pushed up the Ethereum price in the last 2 weeks. Now, I don't think we've finished yet. You can see we have had a bit of a pullback from yesterday, 10 o'clock. We started dropping already. Okay, because the market has moved up quite a bit. But before we go there, I just want to go to look at the stock market, because the stock market is really the leading the pack here, and we're getting direction from stock market. Now, stock market 2 months ago to the date, 15th of June, well, maybe a bit later than that, 16th of June, we were down at 3,640 on the S&P 500. Today, we're at 4,300. So 2 months, we've gone up 18%. And that has been a massive move in stocks over the last 2 months. And we really have not had a pullback. We were acting in this rising wedge formation, which is a bearish structure. There's a 68% chance to break to the downside, but also 32% break to the upside. And you can see how we've broken up. But if we see where we are now, and so we're over here, and we just go back in history to see the same points. You can see how that acted as resistance in May this year. You can see how in March this year it acted as resistance. So there's a whole lot of support and resistance exactly where we are now at 4,300. So I expect the same to take place now, that we are going to have some sort of pullback here. I don't know how deep it is going to be, the pullback, because we know that the ruling party in the United States is on a mission, and because of the midterm elections that's taking place in November this year. So they're trying to drive the stock market up. They're trying to drive positive sentiments in the United States amongst the community, and they're doing the utmost to do that. Back down, I'm not too sure how deep that will go, but an idea would be down to I would say down to this level, 4175. You can see there it's acted as very strong support. I would say that's possibly the deepest that we will go down to. Maybe even showing that there's some other support areas here that we could possibly go to. The biggest concern for today has been the dollar index. And if we have a look at the 12 on the dollar, let me maybe go to the daily. So the interest rate hikes in the United States has strengthened the dollar, and that's been an uptrend for ages now, but it really has ramped up since the interest rate started going up, and that was in March. And you can see it's been in this yellow channel. And from the 15th of July, we started getting not hawkish, what's the other word that they use, the Fed are using right now, dovish talk out of the Fed, and we can see we've had a bit of a drop. We actually broke out of this channel. We went and found support at 105.50, but a big concern today is that we have now gone back into that channel again, and we've broken out of a daily trend line here to the upside here. So we need to keep an eye on this dollar. We don't want a strengthening dollar because that is bad for the markets. There is a resistance line here. I would say exactly where we are right now in this area here. You can see that there is resistance here where we are right now. So I'm hoping this resistance holds and it gets rejected here and trends down. So that is one concern on my side. The 10-year yield. Now we need to go back and have a look here when this all started in the change of the trend in the stock market, and that started in the middle of June, like I showed you, and that was based because of a spike in 10-year yield. You can see how we spiked up from the 10th of June right up to the 14th. So it was a massive spike in terms of the 10-year yield. We went to 15% in the space of 4 days. But you can see what's happened here is that it's come down and has formed this head and shoulders structure. And we did break to the downside on the 22nd July, and we've come up to retest. Now, this retest looks like it is positive, and we are going to trend down, which is very good now for markets, opposite to what the dollar's doing. So a 10-year yield that comes down and stabilizes, that's going to be good for markets. So that is one positive aspect. So right now we are at resistance, as I say, in the stock markets. So if we go and look at Bitcoin, which is the biggest coin, and sorry, let me just go there. So Bitcoin has been acting in this channel, in this wedge, for the last 2 months. And as I say, we went up to 25,200 this morning, and we've come down and we've retraced to a support line of 24,000, and that is currently acting as support. Now, based on what we've seen here with the S&P 500 possibly hitting resistance, and you can see it's getting rejected here on the 1 hour at the moment. We're not too sure how it's going to play out. But if the stock market starts trending down, I expect us to possibly drop a bit lower on the Bitcoin chart. And I've got a level here of 23,600, and you can see that we have got a support here around about 23,661. That's that level there. Let me just move this up there, 23,645. That should act as support. And if we just take, and I know Fib Smith is on the call here, I don't want to take his thunder, but if we take a fib there, we can see that the 618 comes down to exactly to that line. That's where we normally retrace to, down to the 618. So that's at 23,663. And you can see this yellow daily support line that comes all the way from June is coming up and intersecting at the same place. So we want this area here to hold. If 24,000 fails as support, we want this level here to hold here. And that would set us up for possibly the next leg up. And that also depends on stock market, what stock market does. So to the upside here, we have got this 25,340 that has been acting as resistance. And if we go into higher time frames here, we've got this massive white resistance line, and its resistance So it comes from November. It acted as resistance on March this year. And I would say that we would come up here and possibly retest this area at about 26,500 if we do come up to this area here. So that would be the resistance to the upside. If we manage to get through there, there's a massive resistance here at 28,650. Remember that this 28,650 has been support not only recently, but if we go back to last year between May and July, that this line here was massive support then too over the period of 2 months. And it's acted as support once again between the 10th of May and the 10th of June. So for 1 month, we're on that level too. Now, just remember that because this has previously been support, there's been a lot of buyers that came in here in May and bought up Bitcoin at this price in anticipation that we were going to move higher. Unfortunately, the market's dropped. So when we get, if we do get up to this area, those buyers will say, listen, they want to cut their losses, they want to break even and get out of the market. So we are definitely going to find strong resistance up here once we get up to this level here. There's definitely going to be a lot of sellers in the market, but that's still possibly a couple of weeks away. So that is pretty much what Bitcoin looks like. And if we go to Ethereum and we look at Ethereum on higher time frames, Ethereum's also been in a channel since June, July, and we've come up and we've hit this $2,000 level. Now, if we go and look here on the weekly, you can see 2,000 has been very strong support here in July last year. Let me just check here back to, don't think we got, no. Okay, so that's fine. So in July last year, it was actually acting as very strong support, and you can see now it's resistance now. So we have unfortunately got rejected off there. Now to the downside, if we're currently on this $1,900 level, if we break this $1,900 level, the next support is at 1,850, and then we got a massive support here at 1,800. But I need to point out one thing here is that when we came up here on the 10th of August, there's a massive liquidity candle here. So this candle moved up quite a bit and it hasn't been tested to the downside. So there is a possibility that we do come down and we come down and we come and even possibly come down and have a spike down to 1,750, capture liquidity there and hopefully move back up again. So that could also take place. This candle hasn't been tested, as I said. So there's a whole lot of liquidity sitting here. So if we do manage to find support in any of these support areas here, that would obviously also set this up for a next leg up. And to the upside, we have to get through this $2,000 level again. And then just pretty much like what I spoke around Bitcoin, we've got this massive white resistance line that comes also from the 1st of December, sorry, from the 9th of November, and it acts as resistance in April, and will possibly act as resistance again to the upside, and that'll be around about 2,250 or even 2,300 to the upside. That is if we find support and move up from current levels, which I'm still expecting to happen. We've still got 4 weeks to go until the event. Now, with these events, it's normally buy the rumor, sell the news. So closer to the date of the 15th, you'll see that already Ethereum will top out and possibly start moving down. So we just have to be aware of that. Do not hang on to the actual date of the event, because by that time it's too late. Have a glass of water here. I don't know if you want to add anything there, Donnie.
No, Jason, I love what you're saying there, and I'm 100% in cahoots what you're saying with regards to Ethereum. And we just need to make sure that we all watch that date. And I assume we will discuss that every week until then.
Absolutely. So you would have noticed that I've got a target sell here. And the reason why I put it there is that if we go into the weekly on a clean chart and just look at the S&P, so we're in a downtrend from the end of December last year. We found support, and I've put here fib lines where I mentioned to you earlier that 618 is normally the retracement number. So if we go here, 618 is at this 43.64, and the 786 is at 4,565. So we normally do retrace there, and you can see that we're almost there already. We're only 2 months here from the bottom, and we're almost at the retracement level. So I'm expecting that we could even go past the 618 in a couple of weeks' time and possibly go to the 786. And who knows, this market can carry on. Nobody's got a crystal ball to say that it's going to stop here and trend down again. It can carry on right up again. But I put here 618 as the normal retracement, and that's why you've seen this target sell here that I've put in here. So don't get too concerned about what I've written there. Stock market can carry on going up. Okay, so if we go back to the charts here, I just want to show you the total market cap has also been trending up, exactly like what we've seen with other structures and rising wedges or rising channels. The total market cap's done the same. It's been in a massive uptrend. In a wedge formation, this morning we hit 1.17 trillion, and we've come down and we've found support here at 1.11. Now, if we do go down and we go below this 1.11, where could we go to? So we can see there is some candles here that's looking like acting as resistance and support, and that's 1.1 trillion. So we could come down if that 1.11 doesn't hold. We could come down and test this 1.1 and this massive daily support line, yellow line that's going up here. So that is to the downside. To the upside. So I've marked off here 1.2, and the reason why I've done that, you can remember what Bitcoin looked like between May and July this year, sitting at 29,000 to 30,000. And the same applies here with the total market cap. It was sitting at 1.2. And we've had sort of a month there of support at 1.2. So to the upside, this is going to be resistance once again, 1.2. Then above that, we've got a massive resistance line that comes from November again, that would act as resistance again. So this whole area here, 1.2 up to 1.29, is going to be massive resistance to the upside when we get there. And then total 2, which this is a market cap that excludes Bitcoin. And you can see what's happened here is that we've got up to that level that we were in May and June last year. And the reason why this is up here to those levels is because of what Ethereum has done. Remember, this total 2 excludes Bitcoin. And we're already in those levels, and we've got projected here this morning. So I'll just draw this a bit nicely there. Also in a rising wedge formation, we're in a resistance area. You can see how we're acting. So we could come down to 650 here. I think it's 650. Yeah, we could come down and test this level here of 650. Hopefully that stands as support to the downside. If we exclude Ethereum and Bitcoin, and you can see what's happened there. We are also pretty much where we were in May to June this year. We're in a resistance area here at 440 billion, and it's been rejected there. And it looks like possibly we are starting to break out of the structure. I just put it a bit into there. It's always quite difficult to draw this thing perfectly. But nonetheless, we could come down and test this 420 level. I've marked it off there as a possible target. You can see it's been support here and resistance already. So we can come down here. It doesn't mean that it's all doom and gloom. We can come down here and we can find support and start moving up again. So even though we've broken out. So those are on the market caps. I don't know if Donnie Fibsmith wants to come in now, then I can come back again.
Cool. Thank you, Jason. Let's hear a word from Fib Smith and then we go back to you because we want to look at that theory of you with regards to matching coins to Ethereum to see where we should go and what should happen for us. So without further ado, let's go to Andre, our young gun, or better known now as Fib Smith. And Andre, thank you for being on the call. And please take over the mic.
Yeah, good evening, guys. Hope everyone is well. Yeah, the market is looking really good, really bullish, too bullish in my eyes. Yeah, it can't go like this so long. So I'm waiting for a retrace, a bigger retrace. But yeah, anyways, let's not go there. Just while Jason was speaking and talking about Ethereum and Bitcoin and stuff, I was just looking at Ethereum, Bitcoin, and I know Jason is going to speak about this now. But you guys know about my fib that I love so much. But look at this. Ethereum, and this is on the weekly, Ethereum versus Bitcoin, went to the 618, touched that week, and look where we are at now. If you had your orders there, just from that 618, you would have had 44% more Bitcoin the worth of Bitcoin now than you had. And that is the power of trading the pairs. And Jason is going to speak about this now. And one thing that I just want you guys to note, just go to the 4 hours. You can see this is the CME gaps, and I know you guys, everybody knows about this, but we are getting so close to this CME gaps. And they usually say if you fill halfway of the CME gap, you can count that as filled, and that is 28,000. Yeah, let's see what happens. But yeah, let's just quickly go through my charts, and I want to show you guys, and this happens. That reload, most of the times the reload zones, and that is the fib from the 618, and then most of the times it gets filled. And I showed this to you guys, and it went to this 618 and it got filled. And this was the previous one I showed to you guys, but this one didn't get filled. So now there's two things that can happen. You can say, okay, it didn't happen, move on, which I think is more or less the option. So what you do, you just move that fib on, because there it was. You can see I just put it above the 6 just to make sure. But now, because it made a high, then you have to move it up with it. So now you can move that one here and say that's the next target now. But that's not what I think that's gonna happen. So I would rather use it from that one there, because you can see we have this trend line here that has been significant the whole time. And I just told them before the show started, it's crazy how Bitcoin has been in this flag for such a long time. It's crazy. And if you look at this, usually it means bearish. But the thing is, we are getting to a point here which it's getting smaller and smaller. So shorter term, this is my targets, and I believe Jason's targets is basically the same, and that is 23,600. He said it actually. So 23,600, that is my shorter term target for Bitcoin. And I'm gonna say it again. I still have my orders in for Bitcoin that is lower. Let me just see if, no, it's not this chart. I'll show it to you guys now. You can see here, that first order got filled. I can actually delete this because that didn't happen. So my first order got filled, but I still have 2 orders lower. And this isn't about TA or something that I see now in the market. It was just what I saw all the years back and all the bull runs. And that is why I have that orders there. So I'm just leaving it there, and hopefully, and if we get to this order, I'll sell Jason's car and I'll buy some Bitcoin for me. And if we get to that order, I'll sell Umdani's car as well and buy some Bitcoin. But so if we go to the USDT dominance, you can see here, this thing has been smashing just downwards, and downwards, it's good. It's people getting back into the market. And you can say, wait, let me just get this a bit better here. You can say this is a trend line. Yeah, you can actually use it from there. You can say that's more or less a trend line, and we can actually see that it should actually go down a bit more, but that's not what I want you guys to show. I don't really trust this one, But we can see we've been in a downwards momentum for a long time, and that is bullish. That's really bullish. And I told you guys with Bitcoin, I told you guys, if I can see Bitcoin go above this level, then I'm turning bullish. And since then, I have been bullish. So this is really good news for me. But with the USDT dominance, you can see now we have strong bullish divergence here. And that doesn't mean the market has to go now and has to change direction and goes upwards crazy. It's just one signal and one indication for me that the market wants to turn. And for me, the first time I would say, okay, that's the first signal. The second one is I want us to make that high broken. So I want us to see making a high higher than that. Then I would say, okay, guys, just watch out, be aware. But for me, the market looks really good. And I don't have to go through everything. Jason did a really great job about it on the total market cap. You can see it's basically the same. The trend line here, it's looking really good. I don't know how much time do we have here. Okay, we have a bit of time. I spoke about copy trading on Bybit the other day. Dani, is it fine? Can I quickly share about that? Can I? Okay, great. So I'm going to do this. I created a different account, a new account on Bybit, no Fika and stuff like that, because I wanted to show it to you guys. And with assets. And I moved over $100. So I want to show you guys how it works to start copy trading. And this is no financial advice, the nice word that everybody in crypto uses. So it's really easy. Let me just make the screen bigger. So there at the top, next to NFT, and on the phone app, it's not so easy. Like it's really a hassle. It's not really user friendly to use this function on the phone. So what you do is you go to copy trading, and bear with me if I take a long time or whatever. So here you can see that it is filtered now. The ranking is for the 7-day follower profit, and you can change it to 7-day win rate percentage or 3-week win rate percentage. Then it should list the people from 1 until whatever, how many people there is. But let's stay with 7-day follower profit. So currently I'm following this guy positively. So what I want you guys to notice, like there's only, you can see there, 500 out of 500 people are following this guy. And this guy, 250 out of 250 people are following that one. So all of these oaks are already full. Nobody can follow them. So if you want to follow one of these guys, you have to check the 7-day follower profit, guys, and wait until someone leaves or you can get an entry there. So now I'm just going to do this to show you guys how it works, so you can move on to the next page. And you can see there it shows copy. And there it shows you the 7-day follower profit, $14,700, $10,000. But here at the first page, you can see, look at that, $86,000 for the 7-day follower profit. So that's the profit for the guys that is using that guy's copy trades. And yeah, you can ask me questions maybe in the chat. I don't know all the questions, I'm still learning. And it's really, for me, I don't really like doing stuff like this, but I thought, okay, let's just try it and see how it works and whatever. And it's crazy, look at this. Everything is 100%, like 100% 7-day win rate. That's crazy. But one thing you'll notice is this guy doesn't stay here for a long time. But that guy has 75% win rate, but the 7-day follower profit is still really good. But anyways, let's use this guy, this market maker. So click copy, then you just go through the terms and conditions. And I don't think a lot of people ever reads terms and conditions. But anyways, confirm. And now you can see here the contracts. So this is basically you can untick if there is a coin that you don't want him to trade or to copy trade. But I just leave it ticked. Most of these guys only trades Bitcoin, because obviously if you have 500 people following you and you want to trade a coin like Near, I think you're gonna move the market a bit if you want to put in a buy order. So now you can say, obviously this one is, the position mode is isolated, and the leverage is, you can actually tell him, okay, you don't want the leverage to go more than 5x, but I don't care, I'm gonna use 10x. Now the thing is, the order cost, so that was actually a bit confusing. You would think the order cost is you should add there what the cost is for the trade, but that is actually, for instance, I have $100 in there, and now I would like to have max 10 trades. So then I would have to go and say there $10 per trade. So he's going to use $10 per trade. He can't use more than $10 per trade. And then you can add the TP and the stop loss, but I don't care about that because he trades like he wants to trade. So I'm not going to put in my own TP percentages and stuff like that. And now here by available balance, you just click transfer. And now, oh yeah, that's the thing. And so we learn. So now you can only transfer from the derivatives account. So I'm just going to go there, asset overviews, just open a new one there. And I'm just going to transfer from my spot wallet to derivative. Yeah, so transfer USDT. And I'm going to transfer all of it. Okay, cool. Now that is transferred. Let's see if it's going to show there now. Yeah, there it is. So transfer everything. And now it is there. So now what you do, you just click next and copy. And there you go. That is as easy as that. And I'll quickly go to my account. And I'm not afraid to show it because it's not so much. Let me just open this. Copy trade. So this is my account. So in the beginning, I added $300. And then when it got to $350, I withdrew $50 and I just opened another account. You can't use a sub account. You can only copy one guy per time on an account, and you can't use a sub account for that. I just created another account. You don't have to figure it, and I just added that money there and just followed another guy. And which the other guy didn't actually do so well, so I withdrew the money and just followed another one. So I'm just playing around with this. If there is any question, guys, you can ask it. But that is so easy as like just what I did now. And I didn't go beforehand and go through all the processes to quickly show you guys. And one thing is, they just like you would ask now, what do they get out of it? And I think they get 10% of the what do you call it?
Profit.
What? Sorry?
The profit, 10% of
The
the
profit. Yeah, they just get 10% of the profit. But basically, they're using your money for leverage. But yeah, guys, that is that. And again, I can't stop my screen share.
I'll help you.
Thank you.
Cool. Thank you, Smith. And you always bring something just to get all the brain cells working. And after you showed us last time, I got and check it out, but I haven't registered an account. So maybe that's my challenge for the next week. But with that said, thank you, Andre, for showing us that, but also your FIPS and where you see Bitcoin in Ethereum. But Jason, please tell us about tracking your coins with regards to Ethereum, because we know we're in a space in the market where Ethereum is the market leader. And in the next little while, until we get to the 14th, 15th of September, it might be wise to following ideas in going about trading your crypto. So Jason, please take it away.
Thanks, Daniel. So I showed you what Ethereum has done in the last 2 weeks, and that was a 27% move to the upside, which has been fantastic, and that is based off the news that's going to be taking place next month this time. Now, we can argue and say that, yeah, we should have gotten 2 weeks ago already into Ethereum, and possibly too late to get in. But if we get a retrace, like I mentioned now, that we could possibly have, and we come down to lower levels of possibly around about 1800 or so, that could be a good entry to get in for possibly the next leg to the upside. But I just want to share with you what I see on the charts here before we get to the pairings. So if we have a look at coin market cap, which is a measurement of all coins, and it gives a whole lot of information on that. And one of those information that it does gives you the market capitalization per coin. Now, Ethereum sitting currently on $232 billion. And you remember the chart that I showed you earlier on the total market cap of 1.1. So that's roughly about 20%. Now, if we go and measure that market cap against the rest of the market, that 232 versus a total market cap sitting here at 1.1, it's at 20.57%, and you can see where we are right now. But if I go onto this chart, onto the weekly, we have got a structure here which is very, really bullish if it does break out. And what we see here on the weekly, and it starts in May 2018, is a massive cup formation until November last year, and then a handle that's formed. And you can see we've broken out of this handle, and we are right now at the brim of this cup and possibly ready to go to the upside. This is one chart that I am looking at that is looking very bullish. And if we take if we measure the height of this cup, and this is a rough estimate of where the target could be, and we measure that could possibly take us from the breakout right up to 30%, or just beyond 30%. Now, the last time we were at those levels is way back in July 2017, where we were at 30%. So there's a good chance that we do break out here and we move to the upside here, and we go up to this 25% as the first sort of target, and then possibly even up to the 30%. So this is quite a nice chart to be looking at, and to see if this trend carries on going up and this dominance increases. The second chart that I'm looking at is, if we go back to coin market cap again, as I said, Ethereum's at 232 billion and Bitcoin's at 461. Now, if you take 232 times by 2, it comes to roughly half of what Bitcoin is. So I have drawn up a chart here, and once again, I've gone into the weekly, and you can see right from July 2017, this 1-to-2 ratio has been a very strong support. You can see we actually moved off here in May in 2018, and we've come back down again. And right now we have broken to the downside, and we have come back to retest. You can see there, right down to retest. Now, question is right now, do we get rejected here and this ratio goes in Ethereum's favor, or do we break back above that previous support of 2-to-1 ratio? So that's another chart that I'm looking at for interest sake. So that is very interesting as far as Ethereum is concerned. Now, if we go and just have a look at what we wanted to speak about tonight, and the first chart I'm going to look at is the Ethereum to Bitcoin that Fib Smith brought up. And if we go back and have a look at where we've come from, so this chart shows us a Ethereum as a ratio in price compared to Bitcoin. And we can see that in 12th of July this year, the ratio was 0.055. So if you look at Bitcoin's price at that stage, and you take out a calculator and you times it by 0.55, you would have got Ethereum price. But we have started moving off there from the middle of July, and that ratio right now is up at 0.078. It's actually got rejected today of 0.08. So that ratio has been increasing as time goes on. If we look at this chart, and the reason why we look at this chart, we can see that Ethereum is outperforming Bitcoin. Whereas when you've got a downtrend, Bitcoin is outperforming Ethereum. So from the 12th of July, Ethereum has been outperforming Bitcoin to the upside. And if we are going to get some more possible upside and more where Ethereum is going to possibly outperform Bitcoin, where could the targets go to? And we need to go look in history here. The 0.085 was reached in December last year. So there's very good probability that we go and retest that area again. but we need to go back in history and to see where we've come from previously. And if we go into May in 2017, we went right up to 0.15 of a Bitcoin. And then in January 2018, we went up to 0.1. So there's a good chance that we go back, as I say, and test the 0.085, but there's also another good chance that we even go higher at 0.1. So that is rough estimates that we could go and reach. Remember, nobody's got a crystal ball. Nobody knows exactly where price can go to. Now, the question has always been asked, is it better to be, in this instance, be better into Ethereum or Bitcoin? So long as this trend is holding, it is better to be in Bitcoin. As soon as Bitcoin breaks its trend, this chart breaks its trend to the downside, that is when it becomes better to be in Bitcoin. Now, if we go back in history and look for similar situations, we can see here in October last year where we had a similar situation where Ethereum was outperforming Bitcoin, and you would have drawn a daily trend line in place there, and you would have seen that we've came and tested it once in December the 15th, it went up. We had a capitulation here. If you look at Wall Street cheat sheet, came in at capitulation. It didn't create a higher high, so that would have been already the first indicator to say that there's a possible reversal of trend, and we couldn't get above that 0.85, and we trended down and we broke this trend line. So right there, that would have been the right place to get out of, the second chance to get out of Ethereum and go to Bitcoin. And then when you came up for the retest over here, that would have been your third time that you should have possibly got out of Ethereum and got into Bitcoin. So there where you didn't create a higher high was the first time. Second time was a break a trend. Third time was a retest to the upside here where you should have gone into Bitcoin and trended down. So that is another back test there. We can go back to other numerous ones. There's another one here from last year between April and May, and that is quite a steep parabolic move there, but we could have drawn a basic trend line there where first chance was to get to the back. We didn't create a high there again, break of trend there, retest there, and we actually went high on that retest right up there. So those would have been good times to possibly look out to move back to Bitcoin. So this trend line is very useful in giving you an indication as to what coin you should be trading if you're trading Ethereum against Bitcoin. But because we've got this news right now around Ethereum, I showed the people on this morning's call that if we go and look at a lot of these alts, these major altcoins versus Ethereum, and do a comparison, we would be shocked to see that Ethereum has outperformed most of these altcoins in the last 2 weeks. And one of the coins that was brought up this morning was Matic. A lot of people have been shouting about Matic, how well Matic has done over the last couple of days. And I agree, it has done very well. We've come from a break and a retest on the 13th of July. We've had a massive move up here, 85%, sorry, more than that, almost 100% to the upside. But we've been pretty much going sideways from the 18th of July. You can see that sideways action. And if we go and look at Ethereum, okay, so the date is the 13th of July, and we go look at the Matic to Ethereum from the 13th of July was down here. So we were pretty much going sideways if we compared a Matic to Ethereum. So I agree there, right there, would have been right, it would have been correct to be in Matic, but that trend changed when we got to the 18th of July, which was a month ago, where we saw that Ethereum outperforming Matic. So if we go back a month ago, Matic got to a resistance here of $1. It's been trending up and down, going sideways, and that, if you compare it to Ethereum, Matic, the chart is pointing down. So it would have been better at that stage than to be in Ethereum. So you would obviously have to draw a trend line. Yeah, and it's quite difficult to draw a trend line when you got a parabolic move like it is, but you can draw a basic trend line. And you would have seen that we have broken to the downside if you had compared it to Ethereum already on the 22nd of July. So that would have given you an indication to be in Ethereum. And we can go through quite a few of these coins. I don't know if you want to got another coin that we can look at. Let's look at Ethereum Classic, which has also been quite a big mover in the last couple of weeks. And similar situation from the 15th of July up to the 29th of July, Ethereum Classic has outperformed Ethereum. But guess what? From the 29th of July, we are starting to trend down. Now, this can still reverse and carry on back up again. I suppose possibly this is a bad example, but if we go and look at another, let's look at a
Jason, Ethereum Classic is particularly a bad example because it's part in the news with Ethereum as the coin that people will mine when they stop mining Ethereum. So
now Phantom, a lot of people are in Phantom, but look what the Phantom Ethereum chart has done. It's pretty much gone sideways. So I suppose in this instance from May, you could have held Phantom, but it's been going pretty much similar price to what Ethereum has done. So that's gone sideways. If we go and look at, let's have a look at another coin here. And
look at
okay, so this is on the daily. So 14th of May up to the 25th of June, OMG outperformed Ethereum. So we would have drawn basic line like that. And we broke to the downside on the 4th of July. And you can see how Ethereum's outperformed OMG over the same period. So you can do a similar thing to Bitcoin, but the only reason why I'm looking at Ethereum right now is because of this news that's coming up. And if you've got, that's the one thing. Some people have got a strategy where they want to build Ethereum coins because they know Ethereum will go to $20,000 one day. And they will look for two different strategies. That is to build coins where you sell at a high and buy back at the bottom. So you sell your 20 Ethereum at the top and you buy back 15 lower, for example, and you build coins like that. But another strategy is to compare the Ethereum against another coin. And where another coin is outperforming Ethereum, you want to be in that other coin. And where it reverses, you want to go back to Ethereum. Where a coin outperforms Ethereum, you are going to be building coins in that process. Let's just have a look at DOT. DOT also fantastic move to the upside from the 11th of May to the 21st of June. But from the 21st of June, Ethereum's outperformed DOT, for example. So this is quite a good strategy to have. If you want to build, for example, Ethereum, if you want to build Bitcoin, for example, you would do the same. You would create a list, and that list is quite easy to create. You just go to your drop down here and you click on create new list. You can name that list and you can add the coins to it. So you can add a list here, for example, with Bitcoin and compare all the layer ones and all the other coins that you trade against Bitcoin and do the charting with against Bitcoin too. So this is quite a big observation and sometimes comes as a bit of a shock because you think that it's good to be in some of these smaller alts sometimes because you think that they're outperforming Ethereum, but only to find that when you actually chart it, you get the shock of your life to find that you're actually wrong, that Ethereum is actually outperforming your coin. Yeah, Solana. And Solana has performed very well in the last sort of week. But guess what's happened? From the 24th of June, Ethereum has been outperforming Solana. Donnie, I don't know if you want to add anything there.
No, I just want to say, yes, Jason, thank you for bringing that to the table tonight as a discussion point. And it's important to know that's not talking about someone that's a hodler. Remember, a hodler buys a portfolio and keeps a portfolio, and I see Lee commenting on that. And this is not for someone with a hodling portfolio. This is for someone that is busy actively looking at their portfolio and ever so slightly try and increase on that portfolio all the time, a little bit, continually want to add to that, but they're not particularly a day trader. They're someone that will change lane and keep that lane for a month or two, and then change lane again and keep that for a month or two. It's not someone that's sitting and trading every day, but it's someone looking at trends and just make sure that you slant your new purchases more to that trend, especially someone that regularly brings more new money to the table to go look at that trend and rather go and invest in Ethereum itself for a little while than all the other alts. And then again, once that change, you can move those alts back into, or that Ethereum back into the alts that you would prefer, for an example. So yes, Jason, thank you for sharing that. I don't know if you have, it sounds as if you still have something.
That's an important point that I forgot to mention. This is only looking on the daily or the 12-hour time frame. So you draw a trend line on the daily or the 12-hour, and it's not for daily trading. So you would go into Ethereum or into Bitcoin and leave it there for 6 to 8 weeks. And once that trend is broken, then you'll go back into your holding coin. And you don't have to trade every single of your Bitcoin or your Ethereum. You could take 25% and actually trade it this way, and then hodl the other 75%, for example. But it's just an example on how you can actually build your coins.
Yeah, Jason, I get a lot of people that want to buy coins at a specific time. Then they need to know, what do I go into at this time with fresh money? And I think this is a very good view with regards to when you bring money to the table. Go look at the trends, go see whether it's better to get into a specific trend. And sometimes that trend is Bitcoin. At this very moment, that trend is Ethereum and not the alts. But soon it might be the alts ahead, the other alts ahead of Ethereum. Yes, I like what you're saying. I like what you brought to the table. Andre Fipsmith, I see that you have a question there to answer with regards to the period with your trading. Will you answer?
Yeah, I will answer that now. I just want to say, guys, this is actually really a great strategy from Jason. I really like it. The thing is, in a month's time, or I don't care how long it's going to take, we're going to sit here and thought, we forgot to trade coins like that, because then the coins would have ran away and then it's too late. And you thought, if we only would have listened to Jason, because now probably you're too scared because you just care about Bitcoin and Ethereum. You don't want to mess around with that because you already lost a lot, and now you don't want to mess it up again. But if you look at that percentages, more coins you could have farmed, that is crazy. And that's why it's a perfect time to look at that now. And for me, like, I'm in the market, I'm going to be here for life. I'm not going to take out everything at one day. I'm just going to leave it there. I'm just going to build my portfolio. And that is the perfect way to do that, because I don't get money to put in every month and stuff like that. That is how you build your portfolio. But yeah, quickly to that questions. I saw Lee asked, what time period do you leave your funds in trade? It depends. You can choose it. The thing is that I saw, because people use different strategies, and I like to trade myself a lot, and I like to scalp trade and stuff like that. And strategies works on different time frames. And when the market changes a bit, that specific strategy might probably not work in a month's time, because the market moves in different ways, and probably in only 2-3 months time, then that strategy is going to work again. So I don't know what strategy that guy is using. So you can I just go and check it every day or two, how the guy's performing. So I don't know if that's answering your question. And then I saw there was another question.
Andre, you answered half of that when you said you actually took money away from a guy who didn't do so well. The moment that you gone and checked and see, but this guy's now huckling, you just move the funds.
And that's exactly what I wanted to say now. So that that is the risk. A lot of that guys, they don't want to mess up that 100% each win rate. So then they just, if they have a losing trade, they just leave the trade. They don't close it. And that's what happened with that other guy, that my portfolio went like in the loss, really bad, like 50% in loss. And it was just a small amount that I played with. But Then what I had to do, and you asking if you can close at any time, it's basically just like a trade that you would have taken. If the trade is in drawdown and you want to get out, then you have to close your position, whether it is in a winning percentage or if the position is losing money. It depends on you. So I had to make that choice. And because I saw that guy struggling, I can lose the money on my own. So I had to make that choice and say, okay, I'm just going to close that positions, give it to another guy and let him do with it what he wants. So you can take it out at any time. It's just up to you whether you want it to be in a winning percentage or if the guy's in drawdown, you want to close that position at that current time. Cool.
Cool. Thank you, Fib Smith, or better known as Andre. Thank you for that. Jason, last word from you for the evening.
Thanks, Donnie. Can I just show one more chart here? I just want to give another quick example. Take 30 seconds, and it's a chart of Litecoin versus Bitcoin on the monthly. And I just want to show you what Litecoin's performance has been since November 2017, when it was trading as a ratio of 0.02 to a Bitcoin. It's been in a downtrend now for 5 years, and it's broken out of that downtrend and still carrying on down. So it just shows you that sometimes it's not a good idea to be in some of these coins if you compare it to Bitcoin. If you had held on to Litecoin from that date, you would have been down 100% versus Bitcoin over that same period. So that's just another example why you need to be comparing your favorite coin to Ethereum and to Bitcoin to do that comparison. So my closing thoughts is that, guys, I still think we've got a bit of upside here in the next couple of weeks. We need to take advantage of the coins that are moving. And I firmly believe that Ethereum is still going to perform quite well in the next couple of weeks. We need to take advantage of that. Remember that you need to be selling before the actual event, and it's not just a day before. You will find that already in a couple of days before that event, you'll see that the whales are starting to offload already. So don't be the last one to try and sell out if you're on Ethereum. And yeah, that's all from me. Thanks, Donnie.
Cool. Thank you, Jason. And well done on tonight. Thank you, Fib Smith. Well done on tonight. Thank you, team. It's always refreshing to listen to you. If I can quote Lee, thank you, team. It was amazing. Thank you for Crypto Talk for tonight. Go and have some green candles for yourself for the week. Have a blessed one. Bye-bye. Cheers.